Profits be upon you. Welcome to another forecast update. All right, this is a midweek quick take from me, just to give you updates on the forecast I put out this past weekend. This one concerns the FX market. All right, and we're going to start with Dixie. Even though I ended the last video with Dixie update, I'm going to just go quickly over it. As you can see, if we pan out on the weekly time frame, you can see that I've been talking about this weekly area of supply that price has run into, and I've been warning people. I said, listen, this is the time to start thinking about taking profits on longs if you're longing the US dollar. All right, you don't have to trade in the US dollar, if not necessarily, but I'm saying against the other pairs, against the other currencies like the euro, the pound, and whatnot. You want to go short with the pound, the euro, the NZD against a strong US dollar. You know what I mean? So if you're going long the US dollar, you're shorting the Aussie dollar, the New Zealand dollar, you know and the like. If you go to the Canadian dollar, you're going to be going long the Canadian USD CAD or USD Swiss or USD Japanese yen, right? Okay. All right. So we are reacting to this currently. You can see that bearish candle that came out today because of the CPI data. CPI data that came out a little softer. It encourages people thinking that maybe we'll get um, uh, more interest rate cuts next year, as opposed to the promised two interest rate cuts that the Fed is planning right now. So, one of the reasons why the markets had such a bullish, a risk on environment was, you know, was you know, started or triggered, was because of the CPI, the soft CPI data, because of the ceasefire in the U.S. in the Middle East, and you had some strong bank financials that came out for some of the banking institutions that came out today as well. All that encourages people to put uh, their money towards riskier assets and take it away from the safe havens, right? Like the US dollar. So, now we see price pulling down. But do I think that we're going to start to see the pullback now? No, I don't. I think that there's still room for a price to go higher. All right. And like I said in the last video, what I'm looking for when price reaches on any time frame, any of my POIs, like a zone of supply, right? Or a fair value gap. Whenever I see price hit it, I want to see, in a bullish market, I want to see a high, a higher low, a higher high, and then a lower low. I want to see a break of market structure. I want to see an obvious shift in the market from bullish to bearish. All right. And I want to see that higher high. I want to see that high sweat. I want to see a stop hunt there. I need to see liquidity taken, and then a sharp sell off. Get it? All right. Once I see that, it's usually a little deeper than that. All right. Once I see that, I'm looking for price to come back to that break area. All right, because that's going to form a breaker. All right, that's going to form a breaker right there, and I'll love to take a high probability trade from that breaker. Uh, so we'll see. We'll see. All right. So that's Dixie. I'm still bullish. I'm still bullish. I think there's still room for it to go up before it starts to pull down. But I think this like I've been saying for the last couple of weeks, this supply zone is probably going to start. We're going to start to see price turnover. All right. Opposite with the euro, as we pan out, you can see we took a very important. We took a low here. Oh well, actually, we came very close to it. I'm sorry, we came very close to it. This is my target, and I do think that we'll hit that target pretty soon, quite possibly this week. This week, before it ends. All right, but what I want to point out here on the daily chart, if I can get to it, is that prices run past the fair value gap, the bearish fair value gap that I had here. All right, closed beyond that and then reacted to the one above it. All right, and that one is a better one, and insofar as it gives, uh, it's above the range. Look, it 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 passed equilibrium. This one was below equilibrium. All right, the 50% of this trading range. All right, you want to take your longs from this area, which we call discount. This is called premium, above the 50%. All right, you want to take your shorts from up here. All right, prices past that 50% equilibrium, and we're now in premium prices. And this is an area I would want to take a short from. Okay, and let's see what we got going here. All right, I would suggest you look for short setups. If we look at the 4 hour, can we get a hint of one? Yes. Look at that bearish engulfer there. All right, look at this market structure shift here from bullish to bearish. I would be looking for a uh, a, a pullback above this high. All right, I want to see liquidity taken. I want to see the buy side liquidity taken, and I want to see price turnover and fill this wick. I want to see that wick get filled on the 4 hour. Yes. All right. Let's go to the next one. We got pound. All right, and we're on the daily. Very similar. All right. It closed. Sorry, it closed above the bearish fair value gap. All right, no problem there because we came up into this area of supply. You see this wick? All right, this is a sell. This is where we buy. This is a buying wick, a buy to sell, a buy to sell wick. Because on the lower time frames, that's actually forming an area of what? Supply. All right. And this is the refined version of it. This is what we were looking at. All right. The buy up before the sell off. This is just it refined. And what I like to look for is areas like here, where there is liquidity for price to have a good reason that draws price up into mitigating this supply. And you see the reaction to it so far. It's just like euro, insofar as you can see an obvious reaction, right? And we took the low of the previous candle, and I would like to see some follow up. All right, price is already taken out this high here. This with this 4 hour candle, we can see. We'll see if we get some follow through tomorrow. You see, I got put that arrow down there. That arrow was put there Monday, uh, and we see the follow through. We'll see that price has reacted the way we want. We got some low hanging fruit there. These lows are going to be low resistance liquidity, and I love to see those because that's the draw. That's going to draw price lower. All right, for the sweep into our sell side target. So that's what we're looking at for pound. All right. It's very similar to the euro. All right. If we look at the Aussie dollar, I told you it was drizzling a little bit. It's come past these lows and we're heading towards this low here. You can't really see it as obvious as I would like it to be. Come on, man. Where are you going? All right. It's not doing the right thing. There it goes. All right. All right. I'm sorry. So we took out this low. All right. I believe we took that low out, and this is our far target. I believe this one was. I do believe that one was taken. Let me see. Nope, not quite. We're on our way to that one. Okay, I'm sorry. So that would require us to trade below the weekly open, and I'm looking forward to that. You can see there's some buildup of sell side liquidity. So I am looking, and you see how price is coming up into this area of supply. I'm looking for price to turn around here and give us the sweep that low and come into this sell side liquidity. All right, as long as this high, that's why I got a line here. As long as this high holds, and that's a protected high, this I'm looking for price to turn over. I'm looking for sells. All right, there's no reason to look for longs, even though we taking out these lows here, all these lows. There's no reason to look for longs until we get a break of structure to the upside. Period. All right, so until that happens, until that high is taken, I'm looking for sells. That's it. All right. New Zealand dollar, same deal, same deal. I mean, there's no sense in going through the whole thing. We got the supply, prices come back up into it. Looking at that protected high there. I'm just looking for price to turn over and give us what we want. There's our sell side liquidity target. And if we break this high, price just continues to go up and breaks that high, then I'll be looking at this range to pull back into discount prices, right? Into the discount of this range for a trade to this high and beyond. That's it. Once that high is taken, it's going to trigger the pullback. That's it. All right, that'll be the market shift that we've been looking for. All right, Canadian dollar. Again, this is CAD futures that we're looking at. It's the opposite of US dollar CAD. Got it? So we're still in consolidation, and I told you earlier that I'm not going to spend a whole lot of time on it until price breaks this high. What am I looking for longs for? It's been bearish, and it could come up and sweep that high, and then come down and take this low out, and come back to it. This is the low I would be interested in. You understand? Cool. All right. We got to break that. We got to get a breakout first, a real breakout, not a fake, not something that can't be held like this one. All right. I want to see that low taken out and broken through. I want to see it traded through. All right. US dollar CAD, just the opposite. We've been long. I'm looking for nothing but longs until we get a break of market structure. I want to see a sure enough shift in the market. That low needs to be traded through, and then I'll be interested in the pullback. I think this will be a high probability trade to the downside. I do. All right. But longs. All right. If we get this, where we see price trade through that high, yeah, I'm looking for that pullback, because that's going to be a high probability trade, in my opinion. Even late in this bullish leg, we still have that buy side liquidity up there. All right. Just pan out and look at what we're looking at. All right. Why wouldn't price continue all the way up? All right. If you want to call this a double top, well, I think we're getting ready to get that triple top. You call it whatever you want to. This is Swiss dollar, Swiss futures, same deal. It's the opposite. See it, Swiss USD as opposed to USD Swiss. All right, same deal. All right, you see the low. We're heading towards it. We're in supply and reacting to it. You see the arrow on that supply zone. All right, the buy up before the sell off. I'm looking for price to do the exact same thing down to the sell side target. US dollar Swiss, just the opposite. All right, you can see that we are in demand. All right, this is the demand zone here. That's why that blue dotted line is there. This is an area of fair value. Price comes back in to uh, mitigate that order block, all right, into the area of fair value, and I'm looking for price to continue higher from it. That's it. Okay. Oh, I didn't mean to do all of that. All right, and this will be our target. We've already hit one of the targets for this week already, right here. All right, this is the second target. Boom. All right, we'll see if we can get up there. We can use this area of demand to push price higher. Last one. This is the yen. Yeah. Again, this is yen USD, not USD yen. I'll do it next. All right. You see that low hanging fruit? I had that on there this weekend. I said we're probably going to get that low hanging fruit going into this fair value gap. All right. Look what we're doing. We're already halfway through this low resistance liquidity run. We're already halfway through it. All right. And no doubt we'll mitigate this fair value gap, and price is likely to use it to go lower. All right. If price breaks through it, we're coming up into this area of supply. All right. But what I'll see first, what I'm thinking is we'll see price pull back first, and then we'll see if it takes out this low. All right. If it takes out that low, then I know we're heading lower. All right. But the yen is weak, and I don't see that changing anytime soon because of their policies. But we did take a low out, and once you take lows out, there's a likelihood that price may want to pull back some. Well, we'll pull them back. We'll see if this fair value gap will hold, right? US dollar, Japanese yen. All right. Just the opposite. Pull back into this fair value gap. I'm looking for price to likely go higher. This is US dollar led. All right. This is USD is strong, and it'll pull the yen up. Could we use this fair value gap to go higher? I think there's a good chance of it. So we're penetrated into it. Let's see what the next couple of days does. Okay. All right. If we make it through it, there's still an area of demand here. All right. And I'm just thinking that there's a good chance price turns around here. If it doesn't, I'll look for it to do it here. And remember what I told you, when price reaches my POVs, my POIs. All right. If you open your eyes, I'm looking for a price to do one thing: make a low, a lower high, a lower low that sweeps liquidity, a stop hunt, and then a higher high, breaking that lower low, breaking that lower low, that old high, and then pulling back. This is the high probability trade. All right. If it does it here, fine, great, that'd be great. If it does it here, once it reaches the demand zone, this is what I'm looking for. That's it. I will see you in the next video. Hey, thank you for watching, and do not forget to hit that boost and the like button. Subscribe if you want to catch my updates. All right, you catch them direct and enjoy. And be careful trading. I will see you in the next video.